I guess we're going to talk a little bit about IdentiMind for a few seconds. No pitching, but the ultimate piece is IdentiMind is a company focused within the fintech space. Generally, we're in a lot of fintech companies. Company started out really trying to build an understanding of digital identities and came up with a concept of electronic DNA. Electronic DNA, again, started by probably us watching too much CSI or something along those areas where we were looking at how people's DNA is actually structured and things that were going on, how we could actually emulate that online by not just 23 chromosomes, but ultimately building up DNA and electronic DNA on individuals, and then reputation related to their identities, and then ultimately share that as a collaborative model across our customers. So what do we have? Fin companies need, okay, what is RegTech? Not even on our own presentation. So anyone? Oh, thanks, that would be helpful. Okay, we'll move forward. Fintech is growing. Okay, great. So I guess we're talking about fintech and the function around RegTech. So I think an area to start for probably the panel and when we get up here and talk about these areas is that RegTech has become a fairly hot topic over the last year and a half, 2 years, primarily around the growth of fintech. I mean, you could have gone online 4 or 5 years ago and really not had a great deal of regulatory issues or compliance issues that were needed for many of the fintech companies that are out there today. Many of them are worried about fraud, but not necessarily about all the regulatory and compliance pieces they're faced with today. So, clearly an area that's growing. We'll get into it on the panel, and the losses continue to go. But globally, I think we will see greater and greater illustrations of regulatory pressure, and what I was telling or kind of communicating to our moderator Eric earlier was this is an area that's dramatically growing. When we talk about that, there's regulatory pressures in healthcare, regulatory pressures in insurance, regulatory pressures in certainly the financial services. However, in the banking side and banking disrupted, kind of in kind of our theme that we're working on as the conference here is that the legacy world that banks work in and the regulatory pressures they're dealing with are a lot of times dealt with just individuals walking in and out of banks, money moving that they have pretty good information on. As things have moved towards the fintech space and the digital era where you have a lot of Gen X, millennials, centennials, where there's very little information, significant amounts of immigration moving back and forth, lots of cross-border, the ability to understand who is actually not just at the end of the transaction, but whether you can actually do business with those individuals is a key function of regulatory technology. So that manifests itself in KYC, AML, transaction monitoring, all these things that you hear about primarily within RegTech. So it's an area that's growing. We'll dig into it. You can start to look at the numbers of enforcement actions that are taking place around the world, getting more and more attention. Obviously, Wells Fargo was a great victim of one last week. So, and I'm going to blow through this because I got about 2 minutes left. So key technologies, I talked about it when I got up here originally was the digital trusted identities, intelligence around these things, using graph intelligence, using more linking and correlation related to how people are interacting online. Deals a lot with terrorism, deals a lot with cartels, deals a lot with human trafficking. These are things that fintech companies are obviously very exposed to, where regulatory technologies can impact them, as well as where the regulatory agencies around the world are digging in, looking at beneficial ownership, looking at ultimately, are you doing proper KYC, enhanced due diligence, but deeper and deeper functions of those that you need to prove back to those regulatory functions. And just doing the basics, the check the box and we're running through, that's not going to cut it anymore. Obviously, that's the main message that we're getting into. I talked about why does it matter. RegTech is a big piece. It should be faster, should be cheaper, should be much more focused on all the fintech companies out there. And ultimately, as banks move towards this over the next several years, I do not see it for several years, but as banks start to get a little more nervous about what fintech companies are providing and the markets that they're sucking away from them, you will see them move further and further down the line of trying to speed up their old legacy systems, trying to move forward with how they can provide better services into the technology market in general, and ultimately fintech companies. So, this is the old world of like contractors, right? How can I get it done faster, cheaper, and great quality? Generally pretty tough, but within regulatory technologies, you should be able to look at speed, you should be able to look at saving money, you should be able to look at overall, we look at as a network effect, collaborative aspects, right? And we all know banks can share information legally, they just choose not to. The old world of, I don't know, 7, 8 years ago, if your buddy got ripped off and you were online, that was great until you got ripped off by the same person. So people never wanted to collaborate. Today, the market is much more collaborative in how to handle building the integrity model within their marketplaces. So that'll be some pieces we probably talk about on the panel. I'm all done. Thank you.
So Garrett, if I could just ask you a couple of questions while you're still up there. So one of the interesting things about your background is you've actually worked in a number of regulated industries, whether, we're here talking about banking, you've got a great background in payments, you were in healthcare, as you were just alluding to. How do you see the effect of the regulation of the regulators differing across those very different sectors?
Sure. Well, look, I think the healthcare space is much more focused, and to be truthful on my time in the healthcare space, I worked in the technology side of the healthcare space, but in general, if any of you are in healthcare, what a frustrating space. So the piece there's the main difference is the healthcare space is very focused on an individual. They're very focused on individual rights. How, and again, it depends. So you have the people that are worried about it is a proper drug getting passed. Then you have EPA, which is a different function. So the regulatory agencies within the overall healthcare market are very different, but they tend to care much more about an individual. And within the financial services area, we care more about pain points. We're worried, certainly within Fintech and the regulatory, that you're worried about money laundering. You're worried about, like I said, KYC, enhanced due diligence, understanding the trails of money, understanding where things are going, and ultimately trying to build these integrity aspects in there. But they're all certainly they all certainly lack automation, and that's the big pace. Or I think you see a lot of regulatory functions going through. Is we talked there were other panels talking about insurance, healthcare. These areas are just we all feel it every day. Are just brutal in terms of automation and actually having information on you. So. I do believe that. Those are kind of your main differences.
Yeah. And any meaningful differences between your history in payments and versus banking?
Yeah, but that's a different. That's a long story. That's a different.
Oh, we got an hour.
Yeah, we can talk about that. But yeah, there's significant difference between payments and banking. Traditional banking. I don't want to offend half the audience if all you are traditional bankers or where you sit, but look, there's a major culture difference between people who are in payments, fintech, than people who are in banking, and that's not a discussion probably for a public forum, but I think what the function is there. There's a very bureaucratic process there. There's a lot of challenges that banks have. They're trying to do different functions, and they've left certain markets open for a lot of these fintech companies to come in and really make impacts. And payment companies, the same thing, right? There's continual evolutions that are taking place in the payment space, primarily due to generations that are growing up online. Look, a lot of us in this room remember how you used to plug in your computer and it would do handshakes and and all these things. That's just not the case. You have a smartphone, you're off, you're running, you're doing different pieces, and that generational impact globally is what's changing. RegTech, Fintech, all these things, and banks are ill-prepared for it, and they are moving and scrambling in these areas. And I think for people to say that they're not is an incorrect statement.
Yeah, no, my perspective, banks, as you pointed out, banks are large institutions. The banking industry is dominated by these very large institutions, and the biggest ones have regulators actually sitting in the building, right? You can go to any of the top 10 banks and just find a whole floor of regulators and auditors sitting in the building. Whereas the payment space, while you've got a handful of also very large behemoths there, the space overall has got, as you were just saying, a bunch of smaller players. You got all the merchants, you got all the intermediaries, and some of them are smaller and more nimble. And I think there's a very good reason why in fintech we saw certain types of innovation happening first in what traditionally would have been called payments, and now more in what traditionally was called banking.
No question. Again, certain things based on execution, other things based on handling public markets or larger markets. But at the end of the day, we'll cover this in the panel because he wants the other guys up here. So we'll cover that in the panel. That's
Great.
okay.
Okay, thanks.
All right.
Next, let me introduce, sorry, go ahead. Let me introduce Sophia Grub, and she is from a company called TrueAccord, and I'll let her tell you about herself and them.
Thank you. Hi, everyone. I am Chief Operating Officer at TrueAccord. We are a 3-year-old startup with a mission to revolutionize collections, debt collections. Now, that's not an industry that often comes up in conversations about innovation and startups. In fact, it has seen little to no innovation, I would say, over the past 20 to 40 years. We have built a product that uses machine learning techniques to do debt collection over digital channels, email and web primarily, with hardly any involvement from humans. And what I want to talk about, let me try. I want to talk about how do you, as a startup, operate in an industry that is so regulation heavy, so litigious, that all of your peers go, really? That's the sector you want to innovate in? And surprise, there's not a lot of startups working in this space. That's one of the reasons. I think there's a key question around how do you think about going into a space like this? How do you think about regulation? And we see a lot of companies in spaces like ours treating regulation as a nuisance, if you will, a barrier, right? We're going to go do our thing. Hopefully, to begin with, we're too small for regulators to really notice us or care about us. And then by the time they start caring, we'll have a whole consumer network of supporters, and we'll figure it out. And I think that gets people into trouble. What we've tried to do is very different, and so far it's proven successful. We have started by learning about the regulatory environment. One of the first employees of the company was an attorney. When I joined in early 2015, out of 20 people on staff, 2 were lawyers. And I often get the question, shouldn't you guys have fewer lawyers and more engineers? I think heavy investment in the understanding of the landscape, engagement with the regulator early on, is key to structuring your offering and your product in a way that's not going to clash with the regulation. And in our space, if you break the law, you go to jail. Right? So we were keen to make sure that we are on solid footing there. Once you have something, as you're growing, how do you stay engaged with regulators? And we have invested a lot of time here as well and found that if you come with data and if you come claiming that you solve a problem the regulators care about solving, be that online identity or not harassing consumers when collecting money from them, and you're solving that in a data-driven, auditable way. We all know regulators like their audits and the monitoring. We found a lot of receptiveness from the regulatory bodies and a lot of desire to actually work with us and learn from us. And we've had the ability to actually influence the regulation that's coming out. And then, of course, that helps us sell into large financial institutions, large banks, who are keen to make sure that whatever innovation they adopt is coming with an endorsement, or at least lack of disendorsement from the regulatory body. And then lastly, influencing. Like I said, we've been very active in influencing the legislation in the space and have been able to do that. We have not found that as a 50-person company, we are unable to make a difference. On the contrary, we found a lot of interest and the desire to sit down and to see our data, and we're already seeing our practices reflected in the regulatory proposals that the CFPB is putting out to the industry. So I think learning, for me at least, don't shy away from highly regulated industries. If you're an innovator, it can mean an opportunity, right? It's a natural barrier to entry that once you've crossed that bridge, gives you protection from competition in many ways. So if you can get it done, I think the opportunities are big and attractive. I'll stop there.
So stay. I'm told I should be on stage to have this short conversation. So for those of you who don't know, Truecourt is in the collection space. So it is itself in a very, very highly regulated category. So let me ask you, how does having that regulatory input affect the actual product and solution design in what you're doing so that that product you have hopefully gets better regulatory reception?
Great question. Regulatory input truly guides what our product team does and what they put together. We try to take the language recommended by the regulator to us and include it. We try to take the features, and it also impacts prioritization. If the regulator tells us the dispute piece of the process has been really problematic, we think about, well, how do we solve that? And then once we solved it, we are greeted with open arms, of course, because we've solved the problem that they truly care about. So again, allows us to solve problems that the regulator perceives as the most important. And while we also want to cater to financial institutions because we're selling to them, the regulator does know the industry and their input is worth taking into account.
Great. And so as much as I'm sure we all agree that regulators are always rational and consistent and
Absolutely.
stick with exactly the path that they've been on, have you run into, and what do you do when, despite your best efforts up front, the regulator either disagrees later or changes their mind or comes back to you with something adverse to the direction that you set based on their input?
We look at ways to still do what we need to get done without violating the law and the explicit guidance. And I think there's a couple of ways to get there. You can rethink the product a little bit, right, to accommodate the guidance. The other thing that we've done is suggested a pilot. And we've run a pilot on something the regulator was hesitant about. We came back with the data, and I can't say we won, but they're considering it. So I think that's another route to go. And as technology companies, we're actually in a position to move quickly and run these A/B tests, right? And collect the data and deliver it back. Something that would be very difficult for either a traditional collections agency or a large bank to do in a short amount of time.
Great. Thank you, Sophia. And so for our third panelist, let me bring to the stage Vinny Lingam. He's CEO of a company called Civic. Give you his background and perspective on this RegTech topic.
Okay, thank you. Cool. Everyone, it's a bit loud. Cool. Okay, it's still loud. Isn't it too loud? Too loud, okay, cool. Cool, so I want to just tell you guys a bit about where we see at Civic, where we see the world of identity going and the problem with identity theft today. It's there's a big universe where people's identity is being used, and the number of data breaches that have occurred over the past couple of years, it's been increasing. There are 1,800 data breaches this year. So the personal information is already out there, and people are using it now in areas where previously credit bureaus were very good at detecting fraud to an extent in the credit world, so applying for credit cards, banking products, etc. But also just now the broader industry as well. Healthcare is being affected, and many other industries. So we see the universe is expanding where identity is being used, and it's a problem. And so with ID theft and ID fraud, PII can no longer be used as a way of verifying who somebody is. And there was actually an article on, I think it was Wired magazine, read a good article about a Russian hacker who literally used information, he used to buy these dark web data files and phone the banks, and they would ask him questions like, your mom's maiden name, color of your first car, and all that information was at his fingertips. And the joke was that he actually knew more information about the people he was targeting than they did. So when banks asked him the question, where'd you live 5 years ago? The guy was like, I can't remember the address. But the hacker actually knew this information because he had all their credit files. So the reliance on PII and historical information has to go down. We can't rely on just that anymore for identity. And so, when you look at knowledge-based authentication, which is really how it's being used right now, we need to move to a system where fraudsters can, when they try to access a banking facility or try to make an application, it goes through some sort of second-factor authentication process where you contact the person and there's a device or some piece of hardware, typically a mobile phone, which can confirm that, we know that that person has the device and that is the owner of the information, let them have a second factor authentication process. And that's really where I think the industry needs to move from. So from knowledge-based authentication to personal device-based authentication, I think everyone buys into that, because just because you know information about someone doesn't mean you are that person. And so if you can do that, you can close the loop and you can stop identity theft and fraud. So moving from the one area where it's really weak to a place where it's really strong is we think the future of banking is going to go. We just think that the alternative is not very strong. So what we do at Civic is we basically have a network of consumers which are signing up, and it's typically from data breaches. So as consumers are affected, they hear about Civic, they get ID theft protection, and then we have companies contacting us. So if there's a match between someone trying to use the information on your site to apply for a credit card account or a banking account, and we have that person registered, they will get a notification on their phone, and they can approve or decline the account in real time, and that gets you feedback in two ways. If it is the person, then that's great. If it's not the person, you can see which other accounts have been attempted on that device. Or, for example, the application could come through a desktop PC or laptop, but then on the device where the authentication request happens, there's a decline, and you can program your systems, or you can use machine learning to detect whether or not other accounts were opened up recently on that device, and you can find fraud in the system and identity fraud. So it's very interesting how actually asking for permission from a verified source can lead to finding other fraud. And obviously there was a lot of news last week around fake accounts being opened up from internal employees within banks. It's another thing which is an issue. And so how do you get the customer to approve or at least confirm new accounts as they're being opened? So, when we look at how do you decentralize information, we're actually using the blockchain for a bit of this. We're looking at, we don't think that the world is going to work with one company or one organization housing everyone's identity information. I think that's a really bad idea. I think everyone would agree on that. So we think the future of self-sovereign identities, if you've heard of that term, is decentralized identity information being validated by a number of different parties, stored on devices where you can authenticate and verify using the blockchain that person, to a very high degree of certainty, is who they claim to be, and therefore eliminate fraud. So we see it as we need to move away from the current world where we have these silos of information, so social security numbers or identity numbers in different countries and driver's license numbers, and actually just decentralize information at a device level to ensure that people can protect their identity information. And that's all I've got. Thank you.
Great. So, Vinny, identity has been an area that the regulators have been very, very active in over the past decade plus. As I'm sure you know, the FFIC has been issuing guidelines, every several years for the past decade plus. How does that kind of legacy of very specific issued guidelines that often point at a particular technology affect the possibility of another one coming out in the near future? How does that affect the way that you innovate and go to market in that context?
That's a broad question. Look, for example, SMS is a technology which banks use to verify customers. It's really easy to clone SIM cards and get fake SMSs. Get fake SIM cards and get. So you can steal someone's identity, you can pretend to have their phone number, and you can get an SMS confirming that that's you. So NIST released a paper recently, and they were just saying that SMS is not secure anymore either. So these technologies get outdated, and so I think you just have to evolve with it. I don't think there's any other real sort of panacea.
And do you ever face the interesting, so that's an interesting example, and if we go back, how many of you remember the little picture that you had to identify when you were logging into your online banking account? Yeah. Okay, I know what security guys say, but really, how much did that actually help us be secure? So the question is, what do you do, or with a set of regulators who are sometimes behind, right? So you got guidelines that are suggesting SMS, and now NIST says that's not secure. How do you balance between what you know is actually helpful to the true authentication security problem and what the guidelines, which might be outdated, say?
I don't think that when you look, so we take a consumer-centric view on things, so we're building a consumer network. I think using the technologies which are, at the minimum meet the requirements is obviously, it's fine. But I think if you go over and above that, I don't think regulators get annoyed or upset if it's more secure, right? I've never heard of, unless you're doing something kind of funky. But normally if it's more secure, it's okay. So it's all about the user experience, because if you give them a new way of doing something and they can't do it, they can't complete the task, that's a problem no matter how secure it is.
Great, excellent. Sophia, Garrett, can you come join us up here? I guess I'm supposed to sit in a different one. So I've got a few questions to kind of get the discussion hopefully going in an interesting way. And then, of course, we look forward to conversations from you guys in the audience. So, Garrett, one of the places that we were going that you were, I think, have a lot of perspective on is just the way regulation changes. The pace, level, quantity of how the regulatory environment has changed over the last few years, especially as Fintech has become a much more prominent area. I'd love to hear from all the panelists about, first, their perception of whether, of that change, speed, pace, whether it's continuing, and then second, how that affects what they're doing in their spaces.
Want to start down there or with me?
I spoke enough. You can
Okay. All right. So let's see. The question is speed, pace, all those types of things. Let me ask a question. Are there any regulators in the room?
They're busy.
Okay. How many people from banking, like bank people, banking? How many people from Fintech? How many people in banking think they're Fintech? Got it. All right. So I guess the reason I want to ask the question is just on the regulatory process right now, at least on the market we were focused in, is certainly opportunistic, right? They're learning. As I said earlier, it was somewhat non-existent for a period of time. You asked about this world of payments and these things that go on. Back when we started, internet commerce and all these things in the mid '90s. I mean, a lot of you may not remember that, but when we started these things, with different browsers and different pieces, people were not worried about how people were coming online and how things were doing, because there was a real marrying of old technology and new technologies, right? And it was very rudimentary. It was, you need a couple gateways, you need a couple things, you had to give merchants different functions on how to do things. But how to board individuals was still done fairly kind of in a legacy format. You needed certain materials and you used existing banking systems in these areas. Today it's just very different. So I think the regulatory functions are learning right now, and they are learning quickly, and they're also, as I said, it's opportunistic. They can go in and beat up on the banks and hit them with different actions and fines. And on the Fintech side, it's yet to come. So they're ahead of the game because they get to operate in a digital format and they get to move pretty quickly, and they're utilizing a lot of these technologies out there where banks are having to react and try and catch these things in the aftermath. There's also a whole other function on the regulatory side, which is, we had this discussion with our team the other day around, I was meeting with a board member of a very large bank, and the comment was, oh, there's no way, Garrett, they all want to, they need to use technologies like these RegTech technologies that are out there. And I said, that's not the case. I said that a lot of times banks don't want to know because they have to action it the second they know. And that creates work. That creates problems. Those create things. And so there's a function of not wanting to see it because it's not the time for them to have to look at it. They can push that function downhill. So I think the regulators are going to jump in the middle of these things as they are today. And we've yet to start to see Fintech companies greatly affected from a fine, from an action perspective, on regulatory breaches or problems. We see a lot of breaches around identity, people's identities being stolen and those things. That's going to continue to happen. We're almost getting somewhat numb to it until we have other technologies that come along where it really protects it and there's different ways to attack it. A lot of us are pretty comfortable that our credit card is used online. Oh, well, hey, I've got no liability, move it on. But I think when your actual personal information is stolen, your social security numbers, accounts are being opened up, your tax returns are being filed without your knowledge, those start to bother you, right? That's kind of like someone breaking into your house. So I think the regulators are actually going to get more aggressive and ultimately look for very different ways to enforce their regulatory actions. And as I said, it just keeps going on. There's a lot of areas of beneficial ownership that haven't even been attacked that you continue to see regulatory actions and additional filings, and certainly here in the U.S. around. And you're starting to see more in China as well, on how they're issuing licenses to deal with online lending. So you're just going to continue to see this area build, build, and build, and that's my take. And so it's just starting, and that's not a self-serving function. Again, I think it's been fairly nascent in terms of how people react to it and what's been touched.
Yeah. So one of the things that I think is interesting is when someone like Wells Fargo gets hit, they get hit with a big fine. For the handful of Fintech or RegTech companies that have been hit by regulators, generally the company's been taken down. Like the company is no more. So we have seen that a few times. So it's an interesting aspect. Sophia, comments on regulatory change?
I agree with Garrett. We're also seeing a heightened level of attention and a heightened willingness to disrupt existing industry practices. The CFPB, which is the regulator that we see a lot from, is now proposing new practices for the collections industry, which are causing traditional competitors to say, I just can't do business like this. This is impossible. There's also been hefty fines, and what it's driving banks to do is to say, this is too risky. The fines I'm taking for improper collections practices are higher than the money I'm making by collecting on this debt. So I'm either going to move all of this in-house, or I will just stop doing collections. And then what will happen? Presumably, the price of not doing collections will get passed to the consumer through higher costs and higher prices of issuing credit in the first place. So definitely heightening and an increase in attention from regulators, making this more of a risk and more of an interest for banks, and therefore, I think creating more of an opportunity for disruption.
I'm not very experienced in the regulatory world, to be honest, but my observations are that the pendulum always swings too far either way. When regulations are too lax, there's too many bad actors come in, and everyone's doing crazy things, and the regulators get involved, it goes the other way, and it becomes too strict and tight. There's constant back and forth, and it just takes years and decades to resolve. So, I think my principles are, you run a good business, you focus on adding real value, you make sure that the risks are you understand the principles of what regulators are trying to do. And I've been in the payments world before this, so it's more about understanding the principles, what they're trying to achieve, and what the way the actual laws are written. And if you're obviously going over and above what the written law is, so we were in payments, we had to do compliance work, we had to make sure that we were always keeping a step ahead of the bad guys. And so, as the regulations changed, it didn't affect us. They obviously, because we were a good actor in the space. But I think regulators get involved when the industry is getting out of control.
Yeah. So, Vinny, let me follow up on that. You are very much a serial entrepreneur, yet when just a couple of minutes ago I asked you about 10 years of FFIEC guidelines, you kind of ran with me. So, as you entered this industry, what resources, how did you kind of get up to speed so that you understood the regulatory framework or environment that you're working within?
I'm a bit of a voracious reader, so it's Google and time. Just read up about it, meet people, get involved in the industry. I think, look, whenever you enter a new industry, you get connected to people. You meet people, you have lunches, dinners, whatever, go to events, conferences, and you pick up on it, pick up on it quickly, hopefully, and you learn what's going on.
Other thoughts, advice to folks out here about how to learn more about their particular regulatory environment?
I agree that the major factor is being willing to invest the time to either talk to people, interview. We've talked to a lot of lawyers in the industry when the company was being started, and I know our CEO spends every flight reading actual regulation.
Yep.
It's a huge investment of
time. And hiring people. So you hire people who've worked in the industry before, and you learn from them.
Garrett?
You better be doing it now. I mean, hire smart people. Meet with the regulatory agencies ahead of time. Proactive. I mean, a lot of guys aren't proactive. A lot of companies aren't. They're reactive. They'd rather wait. They'd rather wait and get caught. That's the function, and that's what I was trying to say. If you're looking at stuff, you talk about underwriting, financial institutions underwriting, I don't mean credit departments and things like that, but ultimately, whether you're trying to do, you're an acquiring bank, whether you're issuing bank, whether you're, depends on a community bank, you got to understand that there's collusion and collaboration and things that are potentially happening within your existing portfolios, and looking for those things, and not wanting to know them and then not having them happen to you is the real challenge. So, I always say it's a lot of there was that, again, this, I don't call it a pendulum that swung, but there was a very reactive time in the e-commerce space or the financial transaction space, and now you got to be more proactive, and people that are reactive just get wiped out. I mean, as I keep saying, I don't know how many, another marketplace lender that could potentially loan money to terrorists, how those guys can stay in business. They're certainly not going to get loans from other people to continue to loan that money. So you got to be proactive. They got to look beyond what the regulatory actions or what the regulators are asking them to do, and dig deeper.
Great. So as most of you can see, I got a whole page of questions here, but let me stop and see if anyone has any questions they want to interject into this conversation. Yes, in the back.
Which?
Hi, I'm Brianna from Bonova Advisory. We provide regulatory advisory to healthcare and finance. So going back to your initial comment, I'm sorry I didn't catch your name, about healthcare reforms. You said that healthcare regulation is more individual-based, whereas finance regulations are more addressing towards the pain points. What I personally think is healthcare reforms also address pain points, because if you say, for instance, take meaningful use, it really addresses on records getting lost and doctors falsely charging patients for lab tests. Whereas if you take this RIP, it really addresses, payment reforms for lowering the costs. And I guess with population health analytics, we are trying to solve the same problem with finance as well. So if you could elaborate more on healthcare being focused on individual and finance not being, that would be great.
Well, so look, I am by no means a healthcare professional, okay? And I think people get caught into when we talk about, I was trying to make a broad comment on healthcare. There's so many different, there's probably 5 or 6 different regulatory groups that manage that. I mean, the EPA worrying about a salamander in a pond is very different in terms of the FDA worrying about whether you're passing certain drugs and regulating those that are great or not great for individuals. And then you have an insurance function, and you have HIPAA, and you have all these different pieces that operate in there. The finance industry in general is focused on transactional and money, and that's it. And while we all want to talk about customers and you all want to talk about at the end of the day, the finance function and commerce is to move money. In a healthcare space, you're talking about caring people, you're talking about insurance, you're talking about all kinds of different functions, as well as environmental functions that go on. So that's a very vast environment that look, I'm not an expert on it. I would tell you that that's a tough space, and it will continue to grow. But when I look at the finance area, it should be fairly specific, and it should be across the board. I mean, you're dealing with a marketplace, and you're dealing with the integrity across all of this global commerce that takes place. So, I look at the regulatory functions there. Yeah, we're pretty light in certain areas. We're very light in understanding who's really transacting. But you've also, part of the initial discussion was you've also had a real change in the demographics, both geographically and age-wise, of who is moving money now. And that's the big piece that financial institutions need to understand, as well as the fintech companies, on who they're servicing. And I think fintech companies understand their market and who they're servicing. I believe that financial institutions are shifting, trying to understand that. And they're getting caught in the middle. So the regulators have a great opportunity to, as I said, be very opportunistic on how they lay down different regulations. And they can shape a lot of what takes place.
Are there any comments on that, or it was a healthcare?
And I would say, and I'm sure Garrett would agree, that there are also similarities between the two industries. Right?
I agree.
And
I'm
we
not
could
a
have a
healthcare
whole
guy,
panel
so
about that. Ultimately, it's about data, right? Siloed data, that now there's more use cases for exchanging and sharing that data, and then increased risk to that data, right? And how do we, as players in the market, protect against that in a cost-effective, again, auditable manner? But
yeah.
So the first hand I saw shoot up was over here in the back left, the gentleman in a white shirt.
Hi, my name is Mushir from banking. I worked on regulations across 4 continents. My question is, where do you see the highest impact for application of RegTech within the financial services industry?
80 million people in the United States go through a collections experience every year. Traditional collectors dial your number up to 15 times a day to get you on the phone. And then once they get you, you're put on the phone with a commissioned agent who gets paid depending on whether they can get you to pay or not. I think debt collection is among the biggest opportunities for RegTech.
Vinny?
I'll be biased and say that identity is the problem. this is the problem we're trying to solve. People's information is being used, and even in the case of collections, there's debts that people didn't create themselves that they're getting harassed for by collectors. So out of that 80 million, how much of that is not from the person who they think it is? And so this is a big problem. People have lost, people have gone to jail for this stuff. It's crazy. Lives have really been affected by identity theft.
What was your question again?
Biggest
Specific-
opportunity.
Biggest
for RegTech
opportunity?
in
Application of
financial
RegTech,
services.
where do you think is the biggest opportunity?
I think identity. I think you're seeing the digital identity side, and that is self-serving. But you are seeing that move. But look, look at $22 billion lost last year in false tax returns filed that our government we pay for, right? I mean, these are areas that can't even regulate ourselves to some extent. So there's areas I think that the RegTech space on KYC and monitoring of those areas is going to get deeper and deeper and deeper. To understand that, and that area is pretty light, to be honest. And so it's getting deeper. Fintech companies are pretty good at it. They got an opportunity because their demographic again is a lot of younger online people with thin credit files that they're building. But those will be areas that are going to get deeper and deeper. I think in real opportunities globally.
Great. I think we had a question over here.
Justin McCarthy, I'm the global chair of the Professional Risk Management International Association, but I'm the guy who put my hand up and said former regulator. So I just wonder with the definition of RegTech as we're looking at it here, are we missing kind of a higher order question, which is, can we take technology and look at how regulators can use this to publish and for us to consume regulation? Because you're all talking there that we all sit on planes and we read documents. So if I look at identity management as an example, if I'm in Ireland, I have to look at the Criminal Justice Act 2010 sectoral notes. I have to say, okay, what's an acceptable proof of identity and a proof of address? If that changes to include that a library card is now out, but a social welfare card is in, I have to read that, go to my policies, update that, go to my procedures. Are we missing a bigger picture thing here that we could actually use technology in a way that, and look, I know this is impossible and people would love to stick with their statutory instruments and so on, but that we could publish these in such a way that computers could read this, update our policies, and we could say, okay, there may actually be an opportunity to reduce this cost that's happening on compliance. Am I mad, or is this possible in a future that we're heading towards?
You're mad. Yeah. You're mad. You're crazy.
You're mad.
No, I just gotta say. So from a regulatory perspective, like regulators, if there's any, God bless you guys for what you do, but you work for the government, and by nature, you're not incentivized to move very quickly on things. And so, to do these types of efficiencies, I would say this: RegTech primarily should be bringing a great deal of automation and cost savings. That's number one. I mean, that is the functional first piece it should do. And then it's to expose additional layers that are in there, digital layers around identity, all these different functions. But ultimately, to look for that, we have sat in with different regulatory agencies around this world and said, why don't we do this, and why don't we help you here? And it's like, oh, we don't have the budget, or we don't know how to do it, or we don't. So those are difficulties that I think that all of us would experience, whether or not you've been a part of a regulatory action, sat in those meetings, or whatnot. But so I think it's a really tough thing to do I hate to say it, to be, kind of this open form of collaborative, like, oh, we'll all figure out how to do it together and we can run from these things. It sounds great in theory, right? But, it just functionally won't happen there. If you incentivize regulators, now that would be a different way to do it, right? You'd see actions happening left and right. Hey, you get one, like your collection piece. You get 1% of whatever you collect, right? You could see a lot of those happen.
I think it's definitely an issue, and it's a solvable issue, right? This doesn't seem like that difficult of a problem to solve. It's more who has the incentives to come and do it, and how is this a viable business, right? Who will pay a startup that creates this platform and tries to go sell it to regulatory authorities? But the problem doesn't seem that hard, I think.
So I think it's worth having a view on the way the world works today. And so when you go to any place that asks you for identity, what's the one thing they always ask for? It's always government-issued ID. You ever wonder why? Because they don't trust private organizations to issue identities. So when a private organization says, here's a library card or here's a student card, people don't trust that. And why don't they trust that? Because it's easy to issue, it's easy to forge, easy to fake, etc. If we were able to produce a unforgeable digital ID, which is verifiable in real time, that people could carry on their phones, use things like Touch ID, fingerprint, retinal scanning, facial recognition, voice authentication to confirm that it is the person, at a device level, we could solve this problem. And then we could do things like attach digital information, birth certificates, licenses, gun licenses, fishing licenses, whatever, driver's licenses. You could actually solve the problem of the world when it comes to identity and drop costs massively across many, many industries. We're not that far away from that right now. We're, I'd say, 3 to 4 years away, where that will become a possibility. The regulators may take a while to catch up, but commercially, that's going to happen pretty soon.
So let me shift topics a little bit, still on RegTech, to an area that's near and dear to my heart. 10 or 15 years ago, when you went to Sand Hill Road, I know the influence of regulation was something that people minimized in their pitches to investors, right? Most of the Sand Hill Road folks were like, oh my gosh, regulation's crazy, I don't want anything to do with it. Now we're here, the name of the panel is RegTech, a hot new area, or something like that. All three of you are working in areas very significantly influenced by regulation. What kind of reception have you guys seen from the investment community? Is regulation now a positive, or do you have to be more guarded about it still?
So I think when it comes to regulation, so there's local federal regulation, and there's international regulations as well. So this is an interesting thing, because I think when you look at we look at identity at a global level. How do you identify someone who may have 2 or 3 passports, driver's licenses in multiple states, etc.? How do you look at this world of self-sovereign identity, where you are who you are sort of biologically, and then you have attributes from different countries or different organizations attached to it? And so when you start taking that view of regulations, and you have to think of this it's a global regulatory issue. Like, how do you regulate people around the world? So when we look at, for example, in our world of identity, when we look at going into countries outside of the US, so Germany is a great example, where capturing German citizen data and holding it in a centralized database is like, for an American company, it's just not going to happen. We're not going to be able to be an identity provider in that market easily with that sort of architecture. And so I think what regulators want to know is that the information and the regulations around this space is you're thinking about privacy, you're thinking about multiple geographies, especially when it comes to payments and cross-border, etc. So I think it's more about having a global view on how do you solve problems, because you can solve problems at a local level reasonably easy, and you can get local regulators to work with you to help resolve things. But the moment you cross borders, it becomes complicated.
And you've found for a domestic market that the VCs are open to that, but when you started to broaden it out, you've gotten negative reception to that?
I wouldn't say negative, but the question, because remember, VCs don't want to back just a local company that operates in California. I mean, a few might, but they want to have these global Uber-style businesses, Airbnbs, expand worldwide. So you have regulations at every single market. So you're never going to solve the problem in a 1-hour pitch meeting. You need to just explain how your business model is scalable into other markets and how you will comply with the regulations in those markets, if and when they occur. And not all markets may be accommodating to your business.
Got it. Sophia, what have you seen in the VC markets?
I think we found that there's 2 things that you need to have. One, you need to seek out investors that understand regulation. It doesn't have to be a very specific understanding of regulation in your market, but the concept of regulation and how to extract opportunity. Investors that, as I'm sure you know, have invested in that area before successfully know that if you understand the regulation, right, if you work with the regulator, the opportunities are huge, and you have a natural barrier to entry, which makes for less competition. And I think they see that as potential upside, as long as you come to the table and show that you know what you're doing, you've understood the regulation, and you've designed for it. So we've been selective about who we talk to, and the companies we work with, Coastal Ventures, Caffeinated Capital, are companies that specialize in these types of investments.
Got it. So still a negative for some, it sounds like. You kind of blacklist them, but for others,
you choose
it
investors
makes sense.
that understand what you're doing and can help you in ways
Yeah.
beyond giving you money.
Great.
But
Yeah,
often you find, I've come across this very often. I have so a lot of experience in the payments world, and I get startups saying to me, have a look at this company. When I chat to the founders and the CEOs, and they've got decent investors on board, the investors and them, they have no idea what some of the regulations. It's like a blind spot for these guys. Then the startup world, it's kind of like, whatever. And they'll go do things. And they have business models operating outside the boundaries of regulations. And whether they're successful or not, ultimately, TBD. But I think that often it's just a case of, they don't know what they don't know. And so they come up with this cool product and take it to market. And the VCs actually sometimes just miss it.
And thank you for the commercial for my firm.
There
But
you
moving
go.
on.
But I think this is the approach of, while I'm too small, the regulator won't notice, right? I'm under the radar, and then I'll figure it
Sometimes.
out.
Sometimes.
By the time they notice, I'll be big and successful, and I'll make it work somehow.
Sometimes they just don't.
They literally
they don't
know. And they don't bother finding out.
Well, maybe not, but they just don't know, which is scary.
Garrett.
Well, I mean, look, you've got a firm focused on it, right? So I think it can answer the question. I mean, there's a better understanding of it. There are more firms looking at it. I think, if you're using Sand Hill Road as an example, or any of them, they all tend to, firms, and have done this they need to bucket things, right? It either falls in a security practice, or it falls in the payments area, or it falls in different functions. So I think if they bucket it, they look at it, and it's also something they've got to understand that, can you make money from regulatory functions? That's a whole other piece. So we've seen actually the kind of the opposite, where there's certainly a great deal of interest in how the business model operates, and it can benefit from a regulatory side, but also that it can address security functions, and that it can address really an area of digital identity. These identity layers, which is where I think investors tend to jump on and understand that the regulatory pressures are significant on businesses out there. So there's certainly an understanding. There's certainly an interest. VCs are hit and miss. Depends on the day and partnership meetings and all those things that go on with them. So, but I do believe you're seeing more around these areas, and you're seeing companies morph their models to focus on RegTech and how they can create. And I go back to this automation for these businesses. I mean, at some point, it's the larger banks move down these banks, community banks, larger banks, credit unions, all the different ones just outside the fintech space have to figure out how to automate. And while everyone thinks there's a tremendous amount of money, right? You're spending $10 million on it could be a Palantir type of platform that's significant, has a great deal of manual functions, versus going to what I would call easier RegTech environments that could be deployed quickly, but that may be purely API based. And banks aren't ready for that, and they're not sure how to corral the information to feed it correctly. So those are the kind of the differences that'll take place. But the investors will certainly benefit from that, because it's going to happen. It's not a if, it's just when and how quickly it moves through.
Great. Other questions out here? Oh, it's out of time? Okay. Please.
The question is for our participant on our live stream. So the question is directed toward Vinny specifically, but please, all of you as well, feel free to answer the question. The participant asked you, Vinny, can you elaborate a bit more around the challenges you might have had setting up your business and selling your offering?
Sure. So
That's coming from someone at LifeLock or something like that.
So I think the challenge with our business is obviously, the view is that we have to have a ton of users for this to be valuable. And so when you're speaking to the banks and guys want to connect to us, the thinking is like, well, don't you need to have 10 million users connected to the service before it's worth our while to integrate? And to some extent that's true. But with sparse data sets, what you find is you actually find patterns that emerge very quickly inside of even smaller data sets. So as I think I alluded to earlier on, if you can just detect one incident in a couple of hundred through our network, what you wind up finding is you can detect other patterns because you have the bigger data sets on your side as a bank, thousands of applications a day going through, etc. And so you're actually just looking for just flags to help your AI and machine learning tools detect fraud in a better way. So I think the challenge is how do we get to a scale of 10 million users one day in the next, call it 18, 24, 36 months. And the answer really is, data breaches. There are 5 data breaches happening a day, 1,800 plus per year. We're seeing data breaches in the low end, couple of 100,000 user records, mid is millions of users, and with our product, it's free protection for life, $1 million insurance, 24/7 support, and so real-time alerts from the credit bureau. So it's a very compelling proposition for consumers. And so where other businesses have a very high churn factor, so after a year they lose 25%, 50%, 70% of their customers because the credit card the payment gets cancelled or the credit card expires, whatever the case is. Those users stay with us for life, or 1 or 2% might churn for some reason, but there's no reason to cancel your account. You have the insurance for life, and so our growth actually compounds pretty quickly as a company. So as we're onboarding people from data breaches, we're going to grow the user base pretty aggressively. So that's how we solve the problem, which is theoretically a chicken and egg problem, but I like chicken and eggs, so we're good.
We have like 2 or 3 more minutes. Any more questions? Yes.
Hi, James Hines from Ambis Angels. We do loans to startups, bridge loans to facilitate their success and that such. My question is to Vinny. Follow on. I love the notion about putting everything in device specific, but I'm concerned about anything from battery loss to no internet to cloning or whatever. I mean, how can we go device as a way of identification when devices in themselves are subject to all kinds of malfunctions?
Great question. I promise he's not a shill. Did not hire this guy.
My check's in the mail, right?
So the way we've architected our product is that we actually look at consumers having a choice of where they want to store their data. So they can store a backup of it on an iCloud, on Google Drive, Dropbox, essentially. So when we roll this product out, it's going to be your choice of where you store the data, not storing in our service necessarily. We then also use multi-sig technology, so we have N of M keys, or whatever you want to call it. So 2 or 3 keys, for example, where if you lose your device and you lose your passwords using some advanced cryptography, we can actually restore it, but we actually only have one portion of the keys that's required to restore the data. So yes, so you can back the data up and you can restore it, and there are ways doing it. And the real trick actually is making it so seamless and easy for users, because the phone loss thing is a common problem, and how do you restore the data? But technically, we've got solutions around it. The UX work we're still working on, but when we do release it, it's one of those things where, that's a use case we have to cater for, and we have.
So in all fairness, we're about out of time, and these last 2 questions have been very targeted at Vinny, so I'm going to let him off the hook. It wasn't your fault, but any final comments from either the last of you, either on this kind of set of last 2 questions about challenges of building the company and specifically about identity, or otherwise?
I think it's great that we're having this panel, right? I think 5 years ago we wouldn't have had it here. I know that there are other opportunities out there to innovate in regulatory-related technologies. The gentleman brought up one. I know there are others. So I would just encourage everybody as you're sitting in traffic on 101 on your way home, right, or to the airport, it's an interesting space to think about, right? Lots of opportunity there, and I never thought I would jump into a space like this, but here I am. So food for thought.
No, I'd say, strap on your helmet. We're on for a ride, because we got different generations moving through the cycles now, and their expectations are very different from what we've all grown up with.
Great. So. And Vinny, to circle back to you, any last words?
Spoken enough, thank you.
All right. Well, thank you everyone for staying for this panel, and thanks to my panelists here.
Thanks.